Good morning, everyone. Hope you're well. Welcome back to the webinar, the final webinar for me for the year. And we made it almost through another tumultuous year. And let's get into a review of that and what I might expect, or what we could expect for 2024. And it's a sobering procedure to give some forecasts of what you think is going to happen for the coming year. I did that for 2023, and I've done it again for 2024 for the main asset classes. And I'm going to see how the 2023 forecast turned out. And it's a sobering thing to do because you're often very wrong. And I enjoyed this quote, for those of you who can't see the screens, from the Business Maverick. I put 2 children through Harvard by trading options. Unfortunately, they were my broker's children, which I thought was very funny. And so you can often be wrong as well as hopefully right now and again. So forecasts for 2023. Again, I'll kind of go through them because I know some of you listen to this on the move. Okay, and we haven't finished 2023 yet, by the way. These could turn out to be, it's a moving feast, but I've struck them to the last couple of days. And there are a couple of howlers in here, and there's some really, I guess, good ones. One of the howlers is global equities. I thought they would go down in 2023 by about 15%. They actually went up by 20%. That is a very, very poor forecast. I think in my defense, if you take a kind of a 2-year number, global equities are pretty much flat, in fact, over 2 years, strangely. But last year, they did go up by 20%, or this year, rather. They've gone up by 20%. So that forecast was incorrect, so apologies for that one. We can come back onto the reasons for that. Global bonds, I got pretty much right. I thought they'd fall, and they have fallen. Quite unusual for equities to go up while bonds are falling. So bonds down 5%, they actually went down by 10%. That's global. These are all global numbers, by the way. Real estate, I thought would fall by 10%. Quite hard to measure that. I have to say this is a bit of a thumbs up. I think it has fallen. And so I've given myself a 10% fall there. So that was pretty much correct. Commodities, I thought would go up. They actually went down a little bit. Oil price, I thought would go up by 15%. If I'd struck this a month ago, they would have been up 15%. So very volatile, but they actually fell by 7% according to, a couple of days ago over the year. Gold, spot on. So a good call on gold, up 10%. Gold's gone up by 10%. I expect the same again this coming year. We'll get onto that. Bitcoin, spectacularly correct. It actually went up by 150% this year. I thought it got by 30%. I thought that was a conservative forecast. It proved to be. The second howler was the Rand. For my local South African clients and friends, I thought it would go up by 10%. It went down by 10%. We can come on to the reasons for that, but that was an incorrect forecast. South African equities, I got spot on. I thought they would be flat, and they have been flat. And South African bonds, I also got spot on. You got a 10% yield, which is basically the coupon. The yield stayed the same, so you got a 10% coupon, which is your return of 10%. Excuse me. So overall, not too bad. But a couple which are very much incorrect. So you've got to own that. I have to own that. And let's explore why. Firstly, with equities and bonds. I think this chart kind of sums it up. In the blue line is the S&P, which is the best performing market, by the way. So I've been kind of hard on myself there. The S&P did well. And the red line, bonds, did badly. You can see how unusual that is, going back to 1980. For bonds to do that badly, while equities continue to do well. We saw the bond market coming off really very sharply last year and this year, 2023, and equities have continued to go up. And why is that? I think partly there's still too much cash around, still COVID cash savings from the COVID crisis still being plowed into the economy. So equities did that much better. But also more particularly, the tech sector continued to do extraordinarily well, or recovered rather, I should say, having had a sell-off. And this chart shows you how kind of extreme that's been. The technology sector versus the S&P 500. This goes back to 1989 and the tech peak in 1999. We're pretty much at that. So the tech sector is at extended levels, and the Magnificent Seven, Microsoft, Alphabet, Tesla, Nvidia, et al. The top 7 now make up 30% of the market, which is a danger sign in my view. Very concentrated in technology, AI mania, etc. So partly like it's 1999 for the equity market. And that's really pushed equity markets much higher than certainly I would have expected them to go. And everything, on the other hand, was bad for bonds. This is quite a nice chart because it kind of describes how bond markets behave, and whether it's coming out of the Trump era, US democracy did survive. We won't die from COVID-19. That's a slightly awkward sentence because I know some people did, but overall, perhaps it wasn't quite as bad as people thought, and the economy therefore continued. Therefore, bonds did badly. World War III was delayed. You may recall at the time of the Ukrainian invasion by Russia, there was talk of World War III and a nuclear conflict. That did not happen. And then of late, what recession? Recession's been delayed, stroke deferred, and therefore not enough bad news to make bonds go down, to make bonds go up. And so the bond market has done badly, but more particularly it's done badly because we're moving from 0 interest rates to 5% normal interest rates. And that means that your yield on the bond market goes from close to 0 to 5%, therefore the price of your bond goes down. So that move to a more normal level of interest rates I've been talking about all year has undermined returns from bonds as your yield increases. And the narrative really, particularly towards the end of this year, has been the Fed will engineer a perfect soft landing. So we're not even talking about recession anymore. Rates have gone up, economic activities come down to an extent, inflation has come down to an extent, to a decent extent actually. And people are now talking about soft landing. This is a Bloomberg article count, how many times soft landing is mentioned compared to recession. And you can see so soft landing's been now mentioned a lot. And so people are expecting a soft landing, and I do not expect that to happen. I still expect a recession to happen. And it's flying in the face of what's happening, actually, because central banks are now either cutting rates or talking about cutting rates. So the Fed overnight was talking about reducing rates by 0.75 of a percentage point in 2024. So that is a much more what we call dovish tone as opposed to hawkish from central banks. And so central banks think the inflation fight is done, and recession will be therefore avoided. And people like me are a little bit of a lone voice. A recession will be avoided. Yes, you are all wrong. The consensus is very much against me and against us. We expect a recession to be fairly likely in 2024, potentially in the first half of 2024. And we'll see how that plays out. We'll get on to 2024 in a minute. But to date, the narrative for 2023 has been, okay, the Fed is going to nail it. We're going to go back to inflation of 2%. Growth is going to be fine. And that's fine, soft landing. I don't really buy that. Okay, on the flip side, a couple of kind of bright spots, I guess, in terms of returns and in terms of my forecast. Bitcoin roared back. I think we've covered that. It actually behaved more like a safe haven when the market was going down. In those periods when it was going down, Bitcoin actually went up, particularly when we had a crisis. So Bitcoin is behaving, to be honest, very nicely, and I suspect will continue to do well. And then gold. I expect more of the same from gold. It's coming back into people's lives as a safe haven asset. Massive buying from central banks. This is the second year in a row now where we've had, I think, record purchases of gold from central banks as they move from mid-teens % holdings in the foreign exchange reserves to they're going to probably target a third of their reserves in gold, I suspect. So a lot of buying still coming through for gold, which is part of the reason it's doing well. Okay, geopolitically, what happened last year? Well, it wasn't a good year for President Zelensky, unfortunately, for Ukraine. And for those who aren't following it maybe as closely, I mean, the summer offensive or counter-offensive by Ukraine, financed by the West, really hasn't gained any ground at all against the dug-in Russian forces. I mean, Russia has a 1,300 kilometer front line dug in across eastern Ukraine to protect its four quote-unquote Russian regions, which is reclaimed. And Ukraine, despite all the efforts of what's been put in so far, about $250 billion into Ukraine in terms of military and humanitarian aid, $250 billion. That has not been enough to push Russia back. And in fact, we're now seeing, as we speak, Russia starting to push back on Ukraine. So it's been a very tough time for Ukraine, and we'll talk about that in a second in terms of what might happen there. I think, in a very uncertain time. And Russia coming out, frankly, stronger. Whether you like it or not, President Putin is back on the world stage. This is President Putin in last week's visit to the Middle East. Sumptuous welcome. All the carpets rolled out. It wasn't red, it was white, strangely, but extraordinary scenes. And Putin chaired the African summit a couple of months ago. So Russia and, quote unquote, the global south are coming out much stronger against the West in this narrative. And the Middle East, the tragedy we're seeing unfolding in the Middle East continues, very sadly. And it hasn't escalated as yet into a broader Middle Eastern conflict. It seems to be contained so far to the immediate region. However, Iran, for example, talked about just a month ago. It launched its new hypersonic missile. This headline did not reach CNN. This is on actually Russia Today. It launched its Fatah 2 hypersonic missile. Now that flies apparently at between 7 and 15 times the speed of sound, which means it gets straight through Israeli defense systems. In fact, anyone's defense systems. Hypersonic missiles first came out of China, and Iran, strangely, now has them, it claims. And so it's flexing its muscles in terms of that particular conflict. We'll come again back onto that, but that's an ongoing situation we're obviously looking at very closely. And as part of that, the new force in town, of course, is China. This is China meeting Mohammed bin Salman, MBS, in Saudi just a month or two ago, came back and has been brokering peace in the region, having brokered peace between Saudi Arabia and Iran earlier this year. And we're seeing that trend of China being the peacemaker in these regions, which is very different, dare I say it, of the US, which tends to be the aggressor. And so that role of peacemaker is really coming to the fore. And we'll explore why China's doing that in just a second when we look at the outlook. But overall, I've talked about this, we're in a multipolar world. US hegemony in terms of the global superpower is, I think it's fair to say, over. And multipolarity, i.e. lots of centers of power jostling with each other, tends to mean more conflict. And so this chart shows you the number of interstate conflicts. And in the last 10 years, the number has gone from, give or take, 8 or 10 to 30 at any one time. And so multipolarity means more volatility, more conflict, sadly, and more chaos in the world. And we've seen that played out certainly in 2023. So set against that, we've also seen an interesting trend, which maybe people haven't focused on as much, which is that the march to democracy seems to have peaked. And we're seeing more autocratic regimes, more military regimes, more coups. And this chart shows you the move to democracies, which has been really accelerated since the fall of the Berlin Wall in 1989. And the move to liberal democratic movements, capitalism, etc., that an enormous movement in the last 30 years. That the number of democracies globally went from, 10, 15, maybe 20% to north of 50%, actually around 50%. So about half the world got to democratic status. That's now peaking and coming down. And the balance is either closed or, quote unquote, electoral autocracies. So Russia would be an electoral autocracy. Closed autocracy would be China. Either way, if you talk about the new power, which is the global south, it is pretty autocratic if you take the main protagonists in that particular list, be it India or China or Russia or the Middle East or Turkey and some parts of Africa. And why has democracy peaked? Well, questions over the capitalist model post the global financial crisis, but also trust levels have collapsed really in the Western world. Trust in government, trust in each other. This chart shows you the trust in government in the United States. Trust in governments in the US was around 70% positive, remarkably, in like the 1960s, pretty golden era. Today, it's 20% from 70%. And even as recently as 2000, it was 50%. So that is now 20%. So that's a catastrophic fall in trust in democratic institutions. And I think the performance of governments, through some of these crises, through some of the, kind of US imperialism in terms of offshore conflicts, those kinds of things, as well as inequality in society, and the haves and the have-nots, top 1% taking most of the spoils in the last 30 years. I think it's right to say 90% of the population have had zero real wage increases or real wealth increases, and all the wealth increases gone to the richest. And that just creates a very polarized society. And the masses saying, we don't trust government to fix this for us anymore. And so that's been a big problem in terms of trust in democracy, which is translated into, in this case, trust in government in the United States, and trust in each other. Again, this is the United States, interpersonal trust. Quote unquote, most people can be trusted 50% in like 1980. Today, barely 30% trust each other in the United States. That is pretty appalling. Unless you happen to live in, excuse me, somewhere like Norway, who have seem to be a very sound government. I think it's a little easier to manage a country like Norway. Excuse me. Probably easier to manage a country like Norway than it is the United States. 94% trust in government in Norway. Same in Switzerland, Bangladesh, Germany, quite high. So there are pockets, of course, of quote unquote Western society where trust remains, but overall democracy is moving to autocracy globally. The second one I picked up, given COP28, record CO2 emissions this year. Okay, when the Paris Accords were signed back in 2015, that's 8 years ago, 2015, CO2 emissions were meant to halve between 2015 and 2030. Okay, 15-year period. We're about halfway through that, 8 years in. CO2 emissions are not halving; they are hitting record highs. No one seems to talk about this, so we are nowhere near getting to what we, quote unquote, said we would do in this particular period, which strikes me is probably quite an important point. The West has done reasonably well. I mean, the United States, shows you annual CO2 emissions. The United States has reduced CO2 emissions from about 6 billion tons a year to about 5 billion. The European Union, similarly, in the UK, also has reduced its CO2 emissions. But you can see China, and China's at a very different stage of its development. So, this is not pointing fingers, but it's just a fact. China's CO2 emissions have gone through the roof. They've gone from, they've gone from 2 billion tons of CO2 per annum, 2 billion, to around 12 billion in what is that, a 20-year period. So massive CO2 emissions from China. And they are either the biggest or the second biggest, I can't quite remember, maybe the biggest CO2 emitter now. Per capita, they're still lower than the States, to be fair, but there's such a massive population. So the CO2 emissions, that is the main culprit, again, quote unquote, is China. And of course, India, you can see there. So industrializing economies are still in that phase where CO2 emissions are massive, and that means that we're not solving the problem. And so 2023 has been a year of natural disasters. From the wildfires in Greece and Canada to flooding and other natural disasters, which we've all witnessed. And actually on the 17th of November, I didn't actually know this, but on the 17th of November, average annual global temperatures on that day exceeded 2 degrees above the pre-industrial baseline, 2 degrees above for the first time ever. Sorry, ever's a long time. For the first time in this period of our ancient history. This chart shows you that we're kind of 1 degree above. Don't forget the cap of Paris is 1.5 degrees. We hit 2 degrees on that particular day, but on average we're kind of 1 degree. So we're inching, actually we're above 1 degree now. We're inching towards 1.5 degree and heading towards 2. So again, the Earth is warming. I talked about that a few months ago in another webinar. The Earth is warming, so that is happening. We have to get used to that fact and probably need to do something about it. Another trend to pick up in terms of technology. This shows you daily hours spent with digital media in the United States. This is a slightly out-of-date chart, a couple of years old, so it's probably worse now. This shows you that in the United States, a person on average spends over 6 hours a day in front of a screen, be it a mobile or a desktop, laptop, or other connected device. 6 hours a day. So you're awake for 10 or 12 hours. So half your waking hours, if you happen to live in the States, on average, are spent in front of a screen. It's probably 7 hours plus these days. So our world is horribly or wonderfully, depending on how you view it, digitized these days. And it is changing the way we live, clearly. It is also having some awful effects on young people. And that's another debate, but the facts are pretty clear, I think. This shows you depressive symptoms, those teenagers talking about depression or associated ailments. Depressive symptoms in the US have gone from 20%, 25% to 50% of teenagers talking about these symptoms actively in the last 10 years. And I don't think it's a coincidence that they were pretty stable before 10 years ago, and social media became very prevalent. Social media became very prevalent in the last 10 years. And depressive symptoms have doubled in the United States. So there's an issue there, which I think needs looking at. And on the flip side, again, depending which way you look at it, artificial intelligence entered all our lives very firmly in 2023. Partly last year when ChatGPT was launched, and this year certainly in 2023 when ChatGPT 4 was launched in March. And all our lives are going to be changed by artificial intelligence. That is absolutely clear. It'll be much more than chat prompts. It'll affect every task we underperform as humans. And AI was everywhere we went. And Sam Altman, bless him, who seems to be now the godfather of AI, or the modern godfather, is now back as head of OpenAI, which was launched initially by Elon Musk, let's not forget, as a non-profit organization. It is now a for-profit organization, partly owned by Microsoft. Latest valuation, $90 billion. So when the 750 developers there threatened to go to Microsoft, there was $90 billion at stake. And the board got reconstituted pretty fast when that was at stake. And they all got their ducks in a row, and Sam Altman came back, and they're now getting their payout, probably this month before year end. So money talks. Anyway, this is Sam Altman in front of kind of one of the features of AI. This is the App Store for ChatGPT. So this goes from popping questions into a prompt box to, I'll read a few of these, poker mentor, golf tracker, fantasy football, study buddy, Mr. Fix-It, puppy hotline, language tutor. So these are apps which have AI GPT inbuilt, which will help you become a better poker player, or a better DIY expert, or a better language learner. You name it. This is now the future. This app, the AI App Store, will impact our lives in terms of consumer interface very quickly in 2024. So keep an eye out for that. And who's leading AI? Of course, China. These are annual patent applications related to AI. Annual patent applications, United States, 15,000 a year applications for AI. China, 65,000 a year. 65K versus 15K. So China's winning, and it's winning in all kinds of different places. I thought I'd throw this slide in just to remind people. China has become, in the last 10 years, the world leader in what's called the fourth industrial revolution, which is the greening of the economy, renewables, etc. Global market share, solar panels, China, 88% global market share. 88% of solar panels are made in China. Civilian drones, 75%. Mobile phone production, 67%. Lithium batteries, 63%. Wind power, 60%. Industrial robots, 50%. Japan's very strong there as well. E-commerce, 44%. It's now the biggest producer of electric vehicles in the world, and it's exporting those all over the world. So China is winning in this game, and it is driving its own economy. I thought this chart was interesting for those of you who can see it. Real estate in China continues to collapse in 2023. They got a real property problem, and that took 3.5 percentage points off GDP last year, or this year rather, 2020. Sorry, this is 2022. Last year, 3.5 percentage points off from property falls, but the digital economy added 3%, and the green economy added almost 2%. So you've got 5% growth in China just coming from these digitization and green economy initiatives, which is something put in place by President Xi 5 years ago, and potentially 10 years ago, to be fair. So this is coming through very strongly in China now, and we need to focus on that and be aware that they are driving the global agenda. And finally, in 2023, before we get on to some forecasts for 2024, these are the masters of the universe. This is the billionaire list, okay, from Forbes. This is the latest one. This is live, actually. Elon Musk, $250 billion net worth, number one. Bernard Arnault, LVMH, but the rest are all, apart from Warren Buffett, they are all technology titans. Larry Ellison, Bill Gates, Larry Page, Mark Zuckerberg, Sergey Brin, Steve Ballmer, Jeff Bezos. And it's no coincidence that we're increasingly seeing Elon Musk meet with global heads of state, be it in India, where he met Modi quite recently, but in France, be it in the UK, be it in China, be it in the United States. Elon Musk is trotting around the world, I'm not going to say dictating terms, but these gentlemen, not ladies unfortunately, are increasingly becoming the masters of our destiny. As democracy declines, as autocracy rises, keep an eye on these people, because potentially dystopian way, they are becoming more determinant in our fate than our world leaders. All right. What about 2024? Well, economies, according to the growth forecasts, are not too bad. United States, 1% growth. European Union, you can see here, 1.5% growth in 2024. So world economy, kind of 3% growth. As I say, I don't really buy that. But overall, people think the world economy is going to be okay in the coming year, which surprises me, given the extent of interest rate rises we've had. The cost of capital has gone up a lot and faster, as you can see from this chart, than ever before. The hikes have been more aggressive than ever before. And it would be unusual, very unusual, not to have some kind of severe slowdown in the face of that. And as COVID cash runs out, as it will do into the first half of this coming year, then you're going to see some pressures in the economy. And I think we're going to see these pressure points coming out in 2024. This is probably a theme for next year, kind of pain points in the economy. The first would be, there's many, but I've picked out a couple. Interest payments on US debt are going to hit $1 trillion. Okay, in 2024, $1 trillion in interest payments. That's 15% of spending. It's going to be more than defense spending. That shows you interest payments versus defense spending in the States. So they'll be spending more financing their debt than they do spend on defense. They spend about $850 billion a year in defense, about 5 times more than China. So that's a potential pressure point. Inflation. Inflation seems to have come down. The risk, and I think we might see this later next year, is inflation starts to move up again. And you see this kind of 1970s pattern repeating itself. You think you got it sorted, and then, okay, there's too much strength, underlying strength in the economy. Inflation starts to pick up again. And then you've got a problem on interest rates again. So that's another pressure point I expect to see come through later next year. At a time when the market, I've mentioned this, is highly concentrated. Top 7 shares, as I said, 30% of the S&P. That's an unhealthy situation because it implies lack of confidence in terms of the breadth of the market. So again, pressure point which may come through in 2024. And by the way, all this talk of soft landings, you always get talk of soft landings just before a recession hits. This chart shows it because people get kind of, oh, the rates have gone up, but we haven't seen the effects yet. And therefore, we're going to have a soft landing. It takes time for interest rate increases to have an effect on economic activity. And you get this kind of honeymoon period where rates have gone up and you kind of solve the problem because it hasn't hit yet in the economy. Therefore, you think it looks like a soft landing. And you saw it in every recession, going back in the last 20, 30 years. And we're seeing it again now. So just mind your eye on that. In the meantime, gold, it turns out very, very few people own much gold in terms of, outside of central banks. This survey shows that around 3/4 of financial advisors for their clients own between 0% and 1% in gold. So very, very low holdings of gold. So there's plenty of headroom for people to own gold and for that price to continue to go up. And similarly for Bitcoin. I did this chart about a year ago, actually. What is Bitcoin actually worth? I won't go into this in detail. It's quite interesting. Bitcoin is currently worth just short of $1 trillion. Okay? Gold, the other safe haven asset, Bitcoin is the digital asset, gold is the physical asset. Gold is about $10 trillion, probably about $12 trillion today. So 1 trillion plays 10 or 12 trillion. Lots of headroom for Bitcoin to increase in value, I would suggest. Money supply is $100 trillion. Bitcoin is not really money. I think it's going to be the store of value. Whereas Ethereum, my favorite crypto, remains my favorite crypto. Ethereum is the backbone of the new digital economy. So that has its own uses, as opposed to Bitcoin, which I think would be the digital gold. Ethereum will go along with that as more of a use case. So still more headroom for Bitcoin and Ethereum, not really the other cryptos, I'm afraid, for me, to go up. And let's finish on some geopolitical forecasts, I guess, for 2024, or some thoughts. Number one, Trump. Well, we better get used to this. Trump, in my view, will win the election in 2024. We had a national opinion poll come out last week. For the first time, Trump is ahead of Biden in the national polls. He's already ahead in a lot of the swing states, and further ahead in the swing states than he was when he won in 2016. So this is a very powerful sign. Biden has been called for impeachment by Congress just overnight. That may go through. So you may end up having Biden being impeached and Trump facing the plethora of criminal cases he's facing. So it's going to be a very interesting runoff at a time when Biden's support is catastrophically low. This shows you the average presidential approval rating heading into re-election. Okay? In purple, that's the average presidential approval rating, and in blue is Biden's. So the average is kind of 55% approval, and Biden's at kind of 35% right now. That's pretty as much as low as you can go. So Joe Biden, who is showing signs of some kind of aging illness, sadly, that seems to be coming through to the voters. And his weakness, in my view, in terms of some geopolitical issues and offshore foreign policy, I think is starting to land at a time when people are having high inflation at home in the States, not really benefiting from any kind of economic growth, stagnant wages. I think that's coming home to roost for Joe Biden. So get used to a new Trump world in 2024, and we'll talk more about that as the year progresses. I think it will be more of the same domestically in terms of what Trump will do. So reshoring, make America great again, there'll be a lot more of that, secure the borders, law and order, a very kind of conservative agenda, I guess you'd call it, with a much more assertive foreign policy and a much more strongman positioning vis-a-vis the strong men in the global south. So you may see that kind of equation in terms of what the global south is able to do somewhat equaling out because of what will be, on the face of it, a chaotic but much stronger foreign policy from President Trump. The first, before we get there, the first election in 2024, and as you know, we've got a lot of them, is in Taiwan on the 13th of January. So keep an eye on this one. Okay, this is important because of China-Taiwan and the fears over Chinese military aggression towards Taiwan, which is a potential problem for next year. The Taiwanese election will be pivotal in this. The leader in the polls is the incumbent, which is the DPP, the Democratic Progressive Party. The incumbent is at 37%, but just behind them is the opposition with 34%, the KMT, and just behind the KMT is the other opposition, the TPP, the Taiwan People's Party, at 18%. So it's a close-run thing, and you can see how in this chart the KMT, the opposition party, is closing up very quickly to the incumbent at 34%. That has increased from 20% in just in the last couple of months. So the opposition parties is catching up with the incumbent very quickly. Now, the important point here, I'll go back to this chart. The important point here is that the opposition parties are much more, seem to be, pro-China or even neutral China than the incumbent. So the incumbent is very much anti-China, independent, and has cut off all ties with China, in fact, or China cut off ties with it as it became more independent. And the polls in Taiwan suggest that most people want to reopen at least dialogue with China because they're afraid of China. And so the opposition parties, which are more pro-stroke neutral China and will reopen those conversations, are gaining ground. And the two opposition parties have also talked, not quite consummated, about coming together. If the opposition parties come together, then they will very likely beat the incumbent. So you may well have a position post the election where Taiwan becomes much more neutral stroke pro-China, and you could well get a Hong Kongization of Taiwan, where China just takes over Taiwan by stealth and starts putting its political appointees onto the Taiwanese government cabinet, its boards, its governing structures, as it did in Hong Kong. And China now controls Hong Kong. It did it by stealth. No one batted an eyelid. And it may well do the same with Taiwan. So it could be in 2024, I suspect this could happen, Taiwan becomes de facto a part of China again without any military force required whatsoever. So Taiwan, which produces 2/3 of global semiconductors, which go into everything we currently own, think about the digitalization of our economy, 65% of semiconductor production comes out of Taiwan. That could go back under Chinese control. I think that could well happen. The however is that China controls 70 to 80% of rare earth production, which goes into all our digital devices anyway, and controls most of the production of those digital devices as I've just shown. So it'll just be another string, another bow to the armory of China in terms of its control, de facto control by stealth over the world economy. So the Taiwanese election is very important, and I suspect we're going to see a demilitarization and an escalation of political control of China over Taiwan. And I suspect it'll just go through. On Ukraine, I'm expecting some sort of settlement in Ukraine in 2024. The Americans are already pulling out of funding Ukraine. I say $250 billion has gone in from Europe and the US. The US Congress and populists are getting, quote unquote, tired of funding Ukraine. You can see it from these polls. And so when funding gets, de facto withdrawn, which actually it'll stop, funding will stop by the end of this year, unless Congress passes something else, then Ukraine has to come to a settlement with Russia. And in Russia itself, these are the latest polls in Russia, as of October, more people now want to move to peace talks than want to continue the military operation. So Russians also want a deal. And if Putin can secure a deal where he gets the 4 Russian provinces in the east of Ukraine, retains Crimea, then that's really what he wanted, quite honestly, maybe all along. And a lot of those provinces are Russian speaking. And so Ukraine will retain most of its territory, including Kiev, obviously. So Ukraine walks away with most of Ukraine. Russia gets what it wanted with the 4 provinces and Crimea. And the world goes back to a little bit more order. And I suspect that settlement is there for the taking, as long as Ukraine pledges not to become a member of NATO for a period of time, which I suspect it probably will. And then kind of finally, this may be my final point before my forecasts. I talked about China being a peacemaker in the Middle East. You can see why China wants to be and needs to be a peacemaker in the Middle East, as opposed to an aggressor. And again, you can see a trend of China kind of creating its empire through economic coercion and political coercion, as opposed to military aggression. And that's going to be definitely a theme in the coming years. I don't expect China to be militarily aggressive, actually. It needs a strong military in order to be the peacemaker. You can't do it without a strong military. But it wants to be the peacemaker and do these things through stealth and create its own empire. And its empire is built around the Belt and Road Initiative. I've talked about this a lot. And the Belt and Road Initiative, which connects China with the rest of Europe, goes through the Middle East. So the Middle East has to be a stable region for China to achieve its global ambitions. So expect to see more of China in Middle East conversations, maybe just behind the scenes, and creating that peacemaker role for itself. And of course, once it's peacemaker, 144 countries in the world, which is most of them, for them, China is the main trading partner. So it is in their interest to keep China on side, and therefore will do what it asks when it comes to geopolitical ambitions. So expect more of that from China in the coming years, and in 2024 in particular. And that means it will cement its position as the leader, de facto leader of the global South, which, to remind people, is large parts of Africa, including South Africa, the Middle East, India, Russia, Central Europe, and China. That will be the new power block, and that position will cement, in my view, in 2024, not through military means, but strangely through peaceful means, which is, I guess, good news in that sense. But it will be a more uncertain, or continue to be an uncertain world. This is Global Policy Uncertainty Index, which is close to all-time highs. So again, a multipolar world, but a multipolar world more controlled by the Global South and by China. So you may see a slightly more ordered and slightly more peaceful world, which I certainly hope for. But in terms of the shift from the West, US, Europe, to the Global South, that's been happening and will continue to happen. It will cement its position, in my view, in 2024. That's going to be a key theme for this coming year. So forecasts, I'll end here because I've got a few minutes left. My forecast for 2024. Again, these are always done with trepidation, but I feel one should put one's money where one's mouth is. Pretty much the same as last year, I fear. I do feel equities will be under pressure. I think you're going to see some pain points or some pressure points coming through there. So my forecast is for equities to fall by 10% in 2024. I expect global bonds to continue to fall. They've had a big rally, by the way, in the last couple of months, but I think they will be weak in the face of potentially higher interest rates, maybe for slightly longer, given my concerns over remaining inflation in the system. So global bonds continuing under some pressure, not too bad, but under some pressure. And the coupon there is not too bad, by the way. So, but a negative year for global bonds. Real estate, I continue to expect to go down. And I think we'll see real pressure in real estate. I think my minus 10% forecast may be conservative there. I'm very concerned about real estate generally, both residential and commercial and industrial globally. Commodities, I'm not making a big call. Oil flat, that's fine. I'm not making a big call there. Gold, I continue to expect to do well. By the way, on balance, I expect commodities may do quite well in 2024, towards the end of next year, but it's not a strong view. But gold, I suspect, will continue to do well. I've said it'll be up 10%. I think that'll be conservative. I think we could see a potentially stellar year for gold in 2024. Bitcoin, I continue to expect to go up 25% to 50,000 per Bitcoin. Again, let's leave it at 25%. It could be conservative, but I'm happy with 25%. And in South Africa, I do expect the rand to strengthen. I suspect against an overvalued global capital markets environment, South Africa will look relatively okay and relatively cheap, and that'll manifest itself through the currency. We need to get through the South African elections first. So I could have egg on my face there completely, but we expect the South African elections to, again, muddle through with some form of coalition, with South Africa getting around, the ANC getting around 47%, high 40% share, and having a kind of a cobbled together coalition with smaller parties. And the world, overseas investors may breathe a sigh of relief when that happens. It's possible. So it may be that South Africa is not quite as bad as we think it might be. Therefore, the rand may strengthen. But equities flat against a tricky equity global background. But bonds, I think, in South Africa are attractive against that background. They're yielding around 10.5% right now. You may well see them yielding 9.5% by the end of 2024, which means you get that give or take 10% coupon and a 10% capital gain. So you could see a 20% positive gain out of South African bonds in 2024. So overall, a interesting year ahead. It's been a tumultuous 2023. I expect more geopolitical, hopefully peacemaking moves led by China and the Global South. That is not the consensus, but that may, in my view, happen, and I think will happen. A tricky year for financial markets, but some bright spots in terms of things like gold and Bitcoin and some bond markets, which can give you some decent returns. And once we get through this period in 2025, we may see a much better time ahead. So again, as always, a balanced portfolio for the long term is the right thing to be. We'll manage these moves in the background, but hold your balanced portfolio through long-term periods, and then you can benefit from all these longer-term trends. As I say, looking forward to 2025, 2026, it's going to be a very exciting time with great advances in technology coming through and maybe a more peaceful world. So I'm very optimistic longer term, but I think we just need to get through these choppy waters through particularly the first half of next year, and then hopefully have a better time going forward. I hope that's helpful, and I hope you have a wonderful break through December and into January, and I very much look forward to seeing you again next year.